Hey guys, my name is John. I'd like to trade stocks, and I've kind of taught myself how to do it over a long period of time, over about 8 years actually. Um, I was interested in putting together some type of course or pay service or something like that. I really don't think that's appropriate because I don't have a lot of experience, but I've just gone from being really bad to being pretty good, pretty decent. And I was going to try to, I guess, capitalize on that somehow and make. I just don't think it would be too appropriate. So I'm going to just ask if you watch this video and you get some type of help out of it, if it helps you out, just donate if you like. The link is on my Hondo Solo 45 YouTube channel. You'll see the donation link. If you don't want to donate, if you can't, that's perfectly fine. Just make, all I ask is make the most of the video and maybe even go further with what I've kind of found. Um, Also, if you want to, I would love to just get with other traders and do a Zoom talk, and we can share each other's screens and just kind of go, really kind of get together like that. That's really my bread and butter. I just like meeting new traders and other traders. That's really what this is about. I'm not waiting on donations to put food on the table. I promise you. But it does help to grease the wheels a bit. But it's absolutely not necessary. Okay, who am I? I got interested in the stock market in about the sixth grade. Um, why? I don't know. I have no idea. But somebody, a guy named Rocky, a kid named Rocky, he was talking about how his uncle helps him buy stocks. I was like, what is that? And he explained it to me the best he could, and I was, wow, okay. Fast forward, always paid attention to it the best I could. I mean, back then we didn't have the internet and all that stuff, and um, I read books and stuff like that best I could, and I really got into looking at charts in college whenever computer labs and stuff started to pop up. And I would spend a lot of time looking at charts. This is 25 years ago, if not longer. And so I have that much experience just looking at charts and being fascinated by charts. I was an art major in college, and probably that has a lot to do with the way I speak, and it has a lot to do with the way I like to see charts. I'm just attracted to the visual aspects of them. What I would like to do is go through sort of chronologically of how I find trades, how I create watch lists. I'm trying to give my 2 bits, 2 cents in there, here and there. I was strictly strictly technical analysis for a long time, and it just didn't really. I would use moving averages, and I couldn't really get them. It's paying too much attention to the moving averages, and I've been through a lot of different courses, and I would start to notice things on the chart, momentum, price channels, different things like that, pivot points, all these things. But I've kind of been able to put together for myself. I've pretty much got a way that I do things now. I'm not out searching for new methods constantly, which I used to, and now I do what I do, and I just wait for things to happen, and it works out. And I'm going to take you through that. There's not going to be any secrets. There's not going to be anything left out. I'm going to try to, and when it comes to charts, I'm going to try to give you exactly what I'm trying to look at on the chart. It's not going to be, a lot of that, you just got to really get in there and look at charts yourself. And I'll try to give you some things to take with you to start to build on or start to keep in mind as you're going through and looking at charts. And you'll start to see the things that I see, if not more, which hopefully would be. I use Thinkorswim. This is the platform. And pretty much set up my chart like this. This is an RSI 2, and I bring the upper, what is that? The oversold down to 50, and I will look for quarterly charts. What I'm looking for are these spots. This actually Adobe. This actually is something I would definitely look at. You can see where these bars are going. It's hard to see on this. Let me do this. These spots here, when price is pushed down, under the 30. And I used to scan for that. I used to do an RSI 2 scan on Thinkorswim, and I found that FinViz to me is a lot. I can just do quarter down, and I'll show you that whenever during the scan. But what I want to go over is the fundamental analysis part first. We're going to put a scan into FinViz, but to understand the scan, I want to show you 2 videos, and I'm not going to play the videos, but I do have them pulled up. And the first one is this is about Peter Lynch's fair value. Basically, valuation is if a stock is overvalued or undervalued. If it's undervalued, that's what you're looking for. If you want something to be on sale. So its value is X and its actual price is below X, so that you're getting some type of a discount. And watch this video, and I'll show you here basically what he says. If you go to Yahoo Finance, which I use a lot, we'll pull up Adobe. Okay, basically, you're going to go to the Analysis tab. You're going to look at the next 5-year growth estimate, and that's the earnings growth estimate. This is 1535, okay? You're going to add that to the dividend. You go to the Statistics tab, you come down. And Adobe doesn't pay a dividend, so that's fine. So there's just nothing added. If it were 4, well, that'd be high. But the trailing annual dividend yield, if it were, say, 1, then this would be 16.35. Okay? This is the price to earnings. I think he uses... You may have to watch the video. I just use this one up here. It's pretty... I think there's another one. I do this pretty quick. I do this on the fly. I'm just looking real fast at these things. It's not... And these aren't critical and these aren't crucial for me to enter a trade. I just want to see where I'm standing with a particular stock, and I'm trying to get the most bang for my buck. If if one stock has a really good chart and this stock has a really good chart, I'm going to try to find, some fundamental data to support one or the other. If two have really great fundamental data according to what my abilities can see, I'm going to go with the best chart. It's just another factor that you need to put in there. So the growth rate is being divided by the price to earnings, and if it's above 1, it's pretty much saying that, hey, it's undervalued. I don't think it's 100%, but it's a pretty good metric or way to measure these things. And this would be way overvalued, okay, if you were to look at this. But if you were to go to FinViz, well, I'm getting ahead of myself. And that's probably okay with Adobe. That wouldn't shake me away from anything. The next thing I would look at, there's another video here. It's sort of a way to get a price target, and it's the current. If you take this price to earnings here, and then you divide it by the forward price to earnings, you're going to come up with a number. And if it's above 1, then you multiply that times the actual price. Now you're going to get a positive future price estimate. And I don't necessarily buy into all these things. I don't really, but it's a way to look at things on the fly for me. So if you come here and you want your trailing price to earnings to be greater than your forward price earnings. That way, when you do the math, you get a positive number. That's just a layer. Pretty important is this return on assets. If you're looking at the whole stock market, I don't want to say a small portion, but there's not a whole lot of companies compared to what you could trade. A lot of them just don't really have any kind of positive return. They're just kind of, I guess they're going downhill, or they're just not having a good year, or I don't know. But you want to separate the companies that are doing well from the companies that are not. And this return on assets is a good way to do that. Profit margin, that's how much profit they make from whatever revenue they make. That's the percentage of profit. I don't necessarily believe all these numbers that are, they may not be completely relevant, but it does give you a picture. At the click of a button, and it's free, you can get a picture, and you can get a comparison from one stock to the other. If another stock's profit margin is -5, and this one's 30, and then you have one that's 5, well, at least one of those you want to get rid of. Because when I trade a stock, I don't necessarily day trade. You could, but why not day trade a stock that you could potentially hold for a long time, or the price could go way up, further than what you actually were thinking. Okay, moving on. Return on equity. It's my understanding that this return on assets, it throws in the debt that a company has. Um, and the return on equity does not. So so the math comes out whenever your return on equity is higher than your return on assets. It's my understanding, and I could be wrong, that there is some debt there. Um, yep, and debt's not a horrible thing here. I mean, it's pretty much how things work. You know, it's a lot these days, or any of these companies, that it's hard to really. If there's a lot of confidence in the company and in what they do and their product, people are going to loan them money. They're going to be willing to borrow money. It kind of shows almost a confidence level in the company when there's some debt, and it could show the opposite. It could show that they're completely irresponsible. But this doesn't bother me. But you want this return on assets is going to be a super important number. What else am I looking at? Held by institutions. I like this number. I think it's important to have a company that, when you're pushing into the unknown, the hard right edge of the chart, you don't know what's going to happen from one moment to the next. You want people that are interested in fulfilling obligations, whether it be retirement accounts, banks, this type of thing. They have obligations to fulfill, and they're willing to hold a large portion of this stock. And their brains are a lot fatter than mine, and probably yours too. So I'm definitely looking at institutional holdings. Now, if a company's brand new or whatever, what's a company that I like is Corsair. It hasn't really, it kind of went up, then now it's coming back down. You know, but I like this company, and I think that I don't know that it's. Yeah, I mean, there is some institutional holdings. Okay, but it may be less. You know, waiting to see what happens type thing. You can see here we have a pretty good spread here on the price to earnings. But I would look at that and I would go. Whenever I'm coming down here, I'm just looking for a positive number for the next 5 years, honestly. And in the next year, I'm just looking really for positive or negative numbers. I'm not really looking to shoot the moon here. This number, this current ratio, this is the assets over the liabilities. So, you know, it has more assets than it does liabilities. You know, that's a pretty good number. I like to look at that. I like to make sure this is over 1, though there are some good companies that just aren't. This enterprise value to revenue, what that basically is the enterprise value is just, I think it's the total if you could say all things that are Corsair, okay, all things that are the Corsair company, that's their enterprise, and how much is that worth? Okay, so say their enterprise value is, I don't know, say it's $1 billion, and then the revenue, hang on a second, let me see this. Let me make sure I'm not brain farting here. Enterprise value to revenue is a measure of the value of a stock that compares a company's enterprise value to its revenue. Okay, so what so what that means is their revenue is each year is very close to the actual value of the company. So if you're getting a 1, right? And if it's like say a 20, then it's going to take 20 years just to make what. So if your lemonade stand is worth $300 and you make $200 that year or $150 that year, then your enterprise value to revenue is 2. So, but if it's equal, then it's 1. So it basically shows the scale of their revenue, I'm guessing. Anyway, moving on. And that's just something that I like to look at. And you start to kind of get a feel for a company looking at some of these things. And that's how I do that. Now, what I'm going to do is move on to FinViz, and I apologize for my scattered nature. FinViz, we're going to go to their screener, all. So, return on assets, I want to do over 5%. Okay. Quick ratio, we could do over 1. Institutional ownership, where is that? Oh, no. Where am I at? What am I doing? Okay. Let's put over 60. Price to sales, that's a good metric, but I mean, you got to kind of be careful because those things are pretty much driven by, it depends on the industry, basically. An industry one industry may have a different range than another. I don't want to be too restrictive. Here's that earnings per share growth that we saw. So if we put over 5%, we know that we have something positive there. So we're not wasting as much time looking at other things. Or looking at companies that just aren't cutting it, I guess. Performance. Here we can take that same idea that I have with the RSI 2 on the quarter, and I want to go quarter down. Okay. In what I guess, if that basically just means your quarter, your candlestick on your quarter is just a negative. I'm guessing that's what that is, or it's the close of that candle is lower than the close of the previous, something along those lines. Average volume, over 500,000. I don't think many things with a good return on assets is going to have too low of a volume, So what are we looking at as far as numbers? We're looking at a lot of charts here, man. And the market's been down a little bit. So I think it's just going to be a lot of there are some other ways we could kind of cut this down a bit. We could do short float, do lower than 5%, cut it down a bit. Okay, that quick ratio, that's a different ratio. That's a liquidity ratio. Though it's good, and you'll see whenever you pull it, if you know FinViz, it'll have all the metrics on the bottom. It's good to have a good quick ratio too, but you know, analysis recommendation. You can go hold or better if you don't want to be too restrictive. Let's go to a buy. See if that cuts down on things. It did a little bit. Okay, so we have a pretty good price target. You could do above price, and it didn't really cut down on much because I mean we're really kind of laying things out for a good price target anyway. Charts, I like to push it over to the candle side. Monthly, I will go through here just looking at stuff and things. I usually find a lot of good charts without having to go do this process for too long. I'm just looking. This is just a nice chart, you know. I mean, it's generally up. I guess that's the life of its of the company. I'm not sure. Let me see. Yeah. And we're certainly coming down on this in this quarter. You see this? Our price to earnings is greater than our forward price to earnings. That's good. Next 5 years is 13% earnings growth. Target price $297, and you definitely want to take that with a grain of salt, but it's positive. Return on assets is 7. Okay. Return on equity 21. It does pay a small dividend. Okay. So let's say we want to put this on a watch list, Equifax. Okay. What I'm going to do is I'm going to go, I have this, if you go to charts, I have it, well, you can set it up however you want, but I have this because you have this little table here, and you can put how many small charts you want up here. I'll go and I'll put this on. Was it EQX? No. What was that? EFX. Equifax. Okay, and that's on the watch list now. That's pretty much what I'm doing. Is I'm making a watch list with companies that have good charts, good fundamentals as far as I can see, and wanting the quarter to be down. Basically, so on the big, if you're looking at the big chart here, on these big charts, which quarter is a big chart. You want price to be pushed down, okay, into these lower areas. We're not quite below 30 here, but I mean, it's still worth watching. And you can see there's an upward sweep in the momentum. So we're moving up in the momentum, and we're down in price. Up in momentum, down in price. That's a good combo, guys. Okay, I'll move on to the chart. I'm going to just smash down to a monthly. Okay. I'm just going to give it some structure. Just to kind of get an idea of where we're at. Whenever you trade, the biggest thing to determine whether or not you get in or when to get in is I'm looking for the price turn. There's always momentum on the chart. You can see here, and all momentum is price is arcing down or up. Okay, you can see here that we're making an M. Here we're making a W, and those shapes are just indicative of price making an arc. It's good to see what's happening with momentum. Here you can see you had downward momentum, okay, in the chart, but let's not go that far. Oh, hell. Okay. So we have downward momentum, and it starts here. This is where, after this point, this is where it kind of teeter-totters around this center point here. And you can visually you can see that there are always going to be these teeter-totter points. Here maybe is another one, but that it's moving around this way. Let me see what Yahoo real fast, just out of. Yahoo will have this near value thing, and it looks pretty good, you know, midway. We can always check Yahoo Finance against, see, their next 5 years is 13%. Well, that was the same. Brain fart. Sales growth is positive. Okay, I like that. I like that a lot. Statistics. See, their current ratio here is a lot lower, but their institutional holdings are good. You know, I mean, this may not be the stock that I ultimately go with, but we're going to look into it. I mean, we're going to put it on the list and see what happens. Back to momentum. Momentum in the chart is very important to kind of see what's going on. You can see here, and this is a monthly chart, so this is a big chart. So we have downward momentum that doesn't come to fruition here. Right here, we should have price pushing down below this point because that completes the arc, you know. But we can see how there's a time here, or a spot here in time where that all that momentum gets flipped to the upside. This is basically the thing that does that is your buyers coming in. Okay, that's so these points where your momentum flips are basically where your buyers and sellers are coming into the market. You can see here, price is pivoting from this candle. Price is pivoting upwards, upward momentum. Okay. Hang on. So this is what I'm looking at. Okay, you can see that. And then here, sellers come in. People will say sellers came in here, and that's true. Okay, that's true. But they also came in here and here. But price continues its upward momentum. Here is where sellers came in. Because the reason I say that is because we could have easily bounced off of this and continued the momentum upward. But here you can see we're losing momentum. If you want to say that price is bouncing off this line, that's not exactly what we're drawing a line where prices bounce. And if you extend this line here, you can see how prices want to come back up, but they're just riding this line. This is where sellers are really taking over, because price is not able to escape that downward momentum that has started. Okay? So that downward momentum, basically momentum is if you have an established amount of traders or established amount of buyers at one point, and then you start to see more sellers coming in. Your price may still be going up from the buyers that are actually, because the buyers are actually going to be greater than the sellers, but you have more sellers coming into the market, therefore starting that downward arc. Okay, and you can kind of see it in these type of ways here. So yes, it is important to see momentum on the chart. It doesn't always have to be the thing that really cements the decision to pull the trigger to make a trade. What I want to show you is moving on from this, it is what I want you to pay attention to is whenever you're looking at these, when price comes down, for price to go back up, generally speaking, you're going to have what's called basing prices, okay? And that will be on these bigger charts. You can only see the big candles, so these points here. So it's going to be your highest or your lowest high down to the lowest low of that move, of that pivot. And the reason basin prices are good is because while this is happening, while price is going down and then changing directions, that's where you want to be. If you look at a chart and you say, where would I have wanted to be? Where would I have wanted to place a trade? You would obviously say the very tippy bottom, but that's not realistic. You've got to wait till there's some, if for nothing, you got to wait till there's some inkling that we're going to go back up. But prices come down, so maybe we're getting a really good price. Okay, so by even waiting, you're actually increasing, or you're lowering your cost base for a trade. But these are the real points here. You know, this is kind of where if you extend this out, you can see this is where price came down to here. You know, in price, and here's a monthly base here. Price will come down and jump out. It finds buyers again, basically, in this area. If we want to refine this to say, well, can we get down here some? Do we have to wait? Well, that's where you go down in your time frame. Okay. You can see here that basing prices will change. You could say when you go down in time frame, okay, now this is our basing price. Okay. Right? But that's not always it's not always useful. So one thing that I do like to do, if you take a trend line and you just shoot it right through price like that, I'm not worried about trying to match things up or anything like that. I'm just shooting it through. I'm trying to get let me see, what am I doing? I can then say this rate right here represents the drop rate here. Okay? Then I can take and attach this like that to the upper, I guess the upper limits. If you were to make a channel, right here, you know, and this communicates something too. This channel right here, price should have come down. You know, if we're going to have a continuation. A lot of times when you're trading, it's not so much what price is doing, it's what price is not doing. That's really what we're trying to find, is what is price not doing. And to a large degree here, that's one thing to pay attention to. There again, is it something we're going to try to hang our hat on? Could price come up here and then come back down? Sure, it can. But what we see here is this is the way that I like to refine the basing price of things. if we zoom in here, we can see that I like to try to come and find the place where this rate here, where something different happened. Certainly here, price did not come down. Okay, so it's a twofold event. Price did not come down here, and it went up here. You see up here, there's no pricing, or if this was our upper limit, there's no prices being printed until here. And here, price didn't go down. See, price could have gone down here even, right? And it didn't. It got stopped. So yes, we do have support, but we're looking at it in a different way. It's not just a blind, this is a line where things are going to bounce off of. It's understanding that what's creating the support is the fact that buyers are coming in and changing this momentum picture here. And if you look on the MACD histogram here, you can see here we really start changing momentum here. Okay, so price, this bar here should have gone down like this. If sellers are still in this bar here, after a short uptick, sellers are going to come in. You can look on a lot of charts and you'll see that constantly, and that's an important spot right there too. Okay, even if that's going down, that would create essentially like it's almost it is a pivot point, but it's hidden. It's a lot different. It does represent price going up, coming down. But the problem here is that price went up and just did not want to come down. So there was no follow through with the buyer, with the sellers. Here and here, we can see this is the time where you'd want to place a trade. And what really is saying place a trade here, if you just have to boil it down, it's just prices going in a different direction now. So a lot of this is just to isolate, has price changed? You know, I mean, has the downward thrusts of price, has it ended and now we're going, you know, yeah, obviously because of the chart here, but you can use this as a way to kind of catalog your turns. You know, and something else I want to show you here with basing prices. Here we can do this, or like I said, you can do a line, just kind of get the spirit of the line, put it on its upward type boundaries, see where price went above, so in here even, so you can kind of modify this a bit. Either way, what we'll do is, you want to note now there's space, the fact that price is printing right here and not down here. These basing prices, if you extend that level of that base, that upward level indicates where buyers will come in at, because that's where this downward action gets changed. So we can take that spot where buyers are coming in at, and that's where our base is going to be built on. And just the fact that we're printing prices here. And if you go into a daily, okay, all of these prices here we're printing prices in a way that we didn't up here. And that's really the thing that's going to get you in. When you start to see this, and we're this close here, right? And price, if you want to do another channel. What am I doing? Okay. Here, prices didn't go down. It just didn't. So this decision is twofold. It's what it's not doing and what it is doing. Okay? And this is that we're creating a downward. We're down in the quarter, and that's what you want. You know, like this, you wouldn't be down in the quarter. So we need to go down. We need to get rid of as many sellers as you can to make it a worthwhile trade. It's that simple. And so it's this prices tendency to print. It's not necessarily like these levels here, and we're coming up to this level, and that's just, to me, is unreliable. The fact that we have prices here and not here, okay, that's what tells me to get in. And then we set your stop loss here. We have a good place to set a stop loss too. And if you're going to hold for a while, I mean, you make your decision on that. Here's another thing too, right here. If you had used these basing prices and said, okay, we're now we're printing, okay, up here and above these base here, this candle right here. If you'd have got in there and you just start to see it come down, the nice thing is you can get out of this, okay, if it doesn't go your way. And that's a big part of trading, is sometimes it's just not gonna go that way. It's not going to go the way you want it, or the way that you've calculated it to, right? And if you want a measure of safety, you can really just watch and wait for it to break. You want a smooth step down. These aren't really good. This chart is not a good example. Let me see Adobe. You can almost see on the weekly on Adobe, there really hasn't been much to signal, okay, we really need to get in there at this time. And as far as a price coming down, say here we have a base. Okay. And I don't know if price is going to shoot right through this or not. That's why I focus on the price rotation, because price rotation can happen. Say here would have been an excellent trade, but price rotated, it is seemingly in the middle of the air. So it really is price rotation that is the thing. And when it comes to price rotation, it all has to do with your watch list, creating a watch list with good fundamentals. And that's the thing, is that's kind of the secret. It's really that out. It's kind of in my opinion, when it comes to trading, and if you say, what's the secret to trading? It's having a watch list and just watching it. And just waiting for this to rotate upwards. Because once you do that, you're getting a good price. B, any of the sellers that would push you out or push price down have really kind of been exhausted to some degree. And all stocks go up and down, especially a good. That's the point with having a good company, and companies that are institutionally invested in, is they will go up and down. When they go down, big companies will buy them back. That's just what they do. They rebalance and stuff like that. The trick is, and it's simple and stupid, is just wait for the price to go back, start going back up. And you don't really need to understand momentum. And I mean, it's nice to see that, like here, it's nice to see this downward momentum here. Is this, just like in the other chart, is getting capped here. You see that? And then you can see now this upward, just in that same vein, this upward momentum here. So you have this downward momentum, and it's getting capped here, and by this time it's starting to go up. A little bit of downward momentum here, and it gets capped. Okay, but in another, so there's that. Okay, so you can look at these points and say, well, they should be going down because there's downward momentum, but they're not. It tells me buyers are coming in. There's a likelihood of that. And with this upward momentum here, it's not getting capped. Okay, you can see here we're pushing through, we're coming back. So this little spot where you've got a base, and then now you're printing out of the base in upward momentum within the market. These are good. This is where these spots where you want to look at. So price rotation is the name of the game with your watch list. The watch list is the secret to trading. It is the secret. Because price is going to reverse. It just is. And you just have to wait for it. If you're trading is for mature people, and if we have to sit here and talk about patience, then I'm wasting my time. If someone has to talk to you about patience, they shouldn't have to. Okay? Shouldn't have to. These spots in momentum is a good tool to see things as they're happening, as well as the basing prices. And that's the point of them, is you're able to kind of see things as they're happening. Here, I can see some upward momentum coming into Adobe. Oh, crap. Let's go over to our MACD histogram on our weekly chart. And quarterly, we've certainly come down. And you see these points. If you go and follow these points, it's not too many times that on the quarter these charts come down here. So that's a thing. That's another good thing. But on the weekly, you're definitely seeing the MACD push the other way. Yeah, prices are coming down. And honestly, you could come down here and really push down in your time frame and start to kind of probe this. You could put a trend line here, or even go further. And I like to use a 30-minute. We could, come down here. If we're going to form a base, if we're coming up above this, you see, you can position yourself. If we're starting to push print prices up here, you can position yourself with the idea that you're going to get out if it starts to go the other way. You can just be very cautious, But there is upward momentum in this market on the weekly chart. So you don't necessarily have to wait for the trend. I rarely wait for the trend. It's almost a ridiculous thought. What I would do is start to understand these places where buyers and sellers come in. Understand that, within these zigzags, you can break these coming down. You can break these. You can go down into your time frame and set yourself up into a trade that's safe. That's pretty much all I have. I can't really think of anything. It's been an hour. I've been talking a lot. If you want to get with me, send me an email. I'll give you my email. If you've made it this far and you want to set something up where we can just sit down and talk about charts all night long, that's perfectly fine with me. Let me see. I'm going to write this out. How do I do that? I've been using this platform for a while, but I'm not the best at it. tstc at mail.com. That was the struggling trader coach was something I was trying to do, and trying to just create like a little brand name for myself. I don't know how well people will respond. What am I doing here? Okay. tstc at mail.com. My name's John. Just send me an email, and if you want to do a Zoom meeting where we can talk about charts, and I can kind of coach you through, really get into these price charts a lot better. And, just looking here, I'm kind of a nut, but looking here, this to me looks like kind of a type of place where this rotation upward is there's almost like a pivot point here, a rotation point, and it's in these where really good trades are found, because we're rotating upward, but prices come down sharply, but we're still in that upward rotation. It's almost like if you're throwing a baseball, the body is pushing forward, the arm is thrown back, and then as the body continues forward, there is a slingshot effect, and you kind of can feel that in your bones whenever you're looking at these charts. After a while, I guess. I mean, you can see here, where price just flips. Okay, this is a completely different chart, completely different price action from here to here, right? You see that? We're getting capped. Our downward thrust is capped, and we're printing prices here where we just haven't before. So these are the types of things. I know I'm kind of nutty, but please give me a shot, and I'd love to just talk to you and hang out. All right. Okay, this is a different day, and I want to kind of go through some charts. I want to go through some momentum issues. Let me see. Give me a second. Give my brain a second to warm up here. In the last video, or in the last bit, I kind of went through, how to get to a good trade, how to kind of get to into the room, basically. And just to recap, in my opinion, you want a good return on assets. That's probably the most important thing. Companies deal with all kind of debt, and it's just normal. But the return on assets is probably going to be your thing to basically to weed out. Other than that, everything's probably laying yap. And then when you get to charts, overall, you want a big, this is a weekly chart on Adobe. You want a big chart. When I scan, I'll look for the quarter down. Okay. So the quarter is going to have to be down. Okay. You want to, that gives you some, when price goes down in that fashion, and it's not just down in an upward thrust, when it's going down, you're pulling in more and more participants that will want to buy. That's the thing. That's kind of the big, I don't want to say a secret, but that's kind of, I guess, new traders don't really catch on to that. So like say in this area, you're going to have more participants that actually want to buy here than say here. Now this is in the trend, and this is a weekly chart. This would be trend is up, this would be trend is down, but the overall trend is up. The lifespan trend. I definitely like to see the lifespan trend up, and that's basic. And that's way out there as far as like time frame. But if you're a person that wants to try to day trade, I would suggest find these trades that could turn into investments or good position trades. Position meaning over this lifespan of trade, you'd have, maybe 10 trades here whenever the price comes down. And to recap, the most important thing you're gonna find, aside from your fundamental issues, trying to find stuff, more important than momentum and more important than price levels and all that, is just price rotation. You have to get down, you have to follow price down and then wait for price to start to rotate. And you don't have to sit here and wait, actually, because within here there are these low spots even in these candles, and you can drill down in the time frame and just kind of, you can put a position on, and if it doesn't come to fruition, you can get out. Like this low point, we can go down. I'll give you an example of that. Oh shit. So I'm putting this line a little bit before this low point. Sometimes it works out where I can see it pretty good, and sometimes it doesn't. Okay, so price is coming down, and you're not sure if it's going to rotate back up on the longer term, or if it's just kind of like a short, if it's going to be quick or not. So some precedents that you would have here to actually place a trade. trend line information. Let me do this. If we come down and just draw our trend line for this part, this is basically the price action. This price is spirit, basically. That's how I like to think about it. And we duplicate that, and we've got some upper limits here. So we can reasonably say that if price starts trading outside of here, and I don't mean this is just a spot where it went above and you wouldn't have known this, you know. So we have right here, as far as rate, we can see how whenever price gets up to here, it falls. That's something I'm looking at. And here, it should have fell around in here. Okay. Price should have come down here, but it didn't. So we can see there are buyers here, and if we find our basing candles, we can see we've come up. And in this candle right here may have been a spot where you put on a trade, and probably a lot of, I mean, obviously someone bought, but a lot of people did. And certainly there's upward momentum here. If we could, let's go over to the MACD, I'll show you that. So throughout here, there's upward momentum, as you can see here. Something I want to show is, I'll open Paint up. With respect to momentum, in prices, how that looks. That looks okay. So basically, and I'm drawing the momentum of price. That would be a fairly straight line is going to be, you know, the ratio isn't changing. Meaning the ratio to buyers and sellers. As it starts to creep this way, buyers are just coming in. The ratio of buyers to sellers is basically changing. So what price does is it'll come, and this may be within an overall downtrend. So, and you know, price zigzags. It's basically like a basic idea that we see with price. So as momentum is changing to the upside, what's going to happen is you're going to have some type of resistance. Okay? And that could be like a basing candle. You know, that could be, you have candles all through here, and that's this spot right here is going to be your lowest high. And or you can have a channel come down and that's where your channel's broken, basically. And like I said, with that, your channel can be broken here without so your channel could be broken here without price going back down. So price almost will flatten out here. So momentum will be, basically momentum will be tested, you know, and it'll either go this way or this way. And sometimes it's hard to call this which point you're going to have which point you're going to have resistance. It's not always an easy thing to call. That's one of those things where you have to be flexible and just say that, you know, you may make the wrong call, and that's not a bad thing. You just have to. The bad thing is not accepting that. You know, nobody gets into this and knows. I think that's the thing with a lot of trading courses and things like that is, I think we think that they're going to show us how to get into something without consequence, I guess. How to trade without consequences. And it's just not, that's just not so, because, you know, it's just not what's going on when people are successful with trading. They just know when the hell to get out. That goes back to the maturity thing. If you just can't hang on to something with a death grip. Another thing about, say momentum is coming this way, and it's just not happening for this. In fact, it's starting to creep back this way. So momentum going down has encountered support. And there again, we don't always exactly know where that support is. You can use a price channel break. You can use basing prices to kind of help you figure that out. And I personally, what I do is if there's a type of channel, and say this is a monthly chart or a weekly chart, and I use this as an upper layer as if you were looking like this, right? And this was the top. This is the top, even though it's going down. And then you don't have anything up here, and then all of a sudden you have prices. I mean, you have trades and stuff at this price level above this area, and you know, and the price isn't being sucked back down into the channel. You have a pretty good idea, you know, and then you can almost wait for a little breakout of that. I'll do that sometimes and put a good stop loss. And that would look like this. You know, I know this is all squiggly, whatever. So there again, we have prices printing in a new dimension of a new dimension or a new ratio. And we're not going down. So that's two things. With price action, you see this, and you've probably seen this before. This is just an overall idea, you know, and it's this is the basing price from here down to this bottom part. these right here are a base, basically. Right here, you can see this a lot. So we've broken out of a base, come down, and right here, if we, this would be a trend line break. Bad artwork, but the market or the price is in an upward momentum. You see? So price is in an upward momentum, and price is down, and now it's starting to show signs that it's wanting to go back. Okay? And if it starts to bounce off here, now you have some warning signs. Hey, maybe I was wrong. And those things are just as valuable as, maybe I was right. And back to this, with momentum finding support, downward momentum finding support, these are good places. If you're in profit here, these are good places to reset your stop, where that momentum is being capped. Can we see it here? Let me see. Essentially, like these little spots right here, that's really what's going on. I mean, where you don't have much of a downward thrust here. Is this a great place to put a trade on? No, I'm not saying that. I would like here, Oh shit. Down in here, of course, would be better. And this is a daily chart, y'all. So, but what I'm trying to show here is we can say that we have a base here, right? And these prices are just, it's almost like a magnet. They just don't have the power to go down, to leave this base ultimately. Sometimes you'll see this drop a little bit, this candle drop a bit. But you can see this whenever you have this, where now we have a trend line break here. Not sure what time frame would be best to show that. I use the 30. I'm partial to, I don't really care for the hourly. You can see here that these prices are building on top of the previous base. Reset this trend. Okay. Here. See? This one didn't quite come down. Here. And you see we had a touch here, came back up. There's two bases here. There's this lower one, right? where price touched pretty much right there. And then there's, what am I doing? Let me see. If we have this upper limit here, then we draw this, we can see here, and then we're kind of forming, we're back into this base here, but you don't go as far down, you see? So you can see how price is kind of structured around these bases. I don't know that a lot of courses touch on that, to be honest with you. Here, this point here, and you got to touch here. A lot of what a base is just a, okay, you can see this. Let's adjust this. This candle right here, and that's just on this 30-minute time frame. This being our base, and this candle right here can also be a type of, it can also be a base, because it represents, you have some downward action and then we're going back up. So it's a more of a pivot point, I guess you could say. Just play around with this, and you'll start to see that these points that you see are almost right there. I don't know why the market finds these points like this, but they do. And there again, is this something I'm going to hang my hat on? I mean, I can observe it while it's happening. Say this trade right here. Okay? I can observe this while this is happening, right? And I can see that we're going down here, past this little channel. So I can set a small stop here, right? If you want it to short. And this is where momentum is creeping up. You see that? And then finds resistance here. I guess I could probably make the argument, if I wanted to, that this resistance is basically basically about where the bottom of that channel, or about the price where we're breaking out the bottom of this channel. Okay, how do I actually jump into a trade? A lot of times it's this is VRTX. This is a trade I'm actually in right now. You could see it fit the model. Price came down. And the financial metrics on this are pretty good. There again, as far as I can tell. Okay. What I did is I was able, I'm just seeing the momentum play out. Momentum's moving up, and we have this big candle here. I think I was looking on the daily. So we're up, and I got into the trade here on this big candle. It's like I said, it's the watch list. You definitely want to have a watch list, and you see these things. And it's like whenever I place a trade, there isn't really a scientific method. actually buy my own BS. A lot of it's just luck. And in hoping that it works out, and this trade did. It doesn't always do that, but most of the time it does, if you're willing to wait, you know. But was there an actual trend line? Was there something I could say, this is the trigger, and you know, you do this and you put your... I don't think so. I think what I'm able to do is just see that this channel price is going down. This is one thing, right? And this popping out of here, that's something totally different. So, you know, momentum, channels, all this is a way just to categorize price and say, this is what's happening right now. And then all of a sudden something different happens, okay? Then we have a clue that, hey, maybe buyers are coming in, or maybe sellers are coming in, whatever you're interested in. But pay attention to these points and these lines here. And stop using moving averages. I use those. I try to make that stuff work, and you can see that price finds these bases right here. Okay. And then uses, what's happening is this is where the sellers are coming in, right here. And that's another big part, is you're just trying to find the buyers and the sellers. And I think that's how thinking back, I think that's how I really got into this way to see the chart, is I just started asking myself, can I find where the buyers are coming in? Or can I find where the sellers are coming in? In word of caution, they don't always do the same thing over and over, of course, because they can't. But these things are pretty apparent on a chart. You know, you just got to kind of give your price chart some structure, and understand that it's not always about this bottom part here. It's more about this base here, okay? If that makes any sense. We're not really focused on this so much, except that we're not able to get past that maybe. But we're looking for this base, okay? And that point on that base will carry, that point actually does carry out, because obviously this is where buyers are all through here. And to say that buyers are here, but not here, it's kind of ridiculous on a channel. And let me show you this. How do I do this? In a channel, you have prices. And this is fairly idealistic, okay? Let's see if I can make this work. Okay. Obviously, the buyers are here, and the sellers are here. Buyers, sellers. Okay? Well, buyers aren't down here. Let me get my thoughts together. how can I say this? Basically, what's happening is the place where buyers are is changed. Okay, and the place where sellers are, the sellers have kind of dried up here. Okay, so buyers are able to kind of come in and create this, you know, hey, it's time to get in, this dinner bell type of thing. What am I actually trying to say here? There's something on the tip of my tongue, guys. Tell you what I'm going to do. Let's go to a totally different chart. Just a random chart. Maybe this will help. Okay. I'm kind of got to clear the air here, or clear the airwaves, because I had an idea of what I was trying to say. That didn't work out for me. Okay, I think I've got this. Okay, so we can see this happening. Ah, crap. Okay. So sellers down here, buyers. Okay. Comes up, sellers dried up, more buyers. So if we're trying to find these points where buyers are, a lot of people will take this. This is my point that I had trouble saying. People will take this point and try to use that as a type of as a plumb line, I guess, and say, well, this is where buyers were. Well, the thing is this channel came down just fine with buyers being down here. So the buyers you're looking for aren't actually here, if that makes sense. So in your channel, yes, you do have buyers down here, right? You do have buyers here, in here. And they were in this, in here all along. But they didn't cause price to go up the way that you need it to right here. There's your trade. They didn't, the buyers you're looking for weren't there. So to put a line here and extend that out and that be your plumb line is ridiculous. That's why we want to use these points up here. Okay? Or even here or here. It's our low points, but it's our highest lows. Or our lowest highs. My bad. It's our lowest highs moving forward. And the reason is because that's the new buyers that have shifted this channel up. So that's why you need to come out. If you want to set a plumb line, it needs to be, hang on. It needs to be here, not here. You see the difference? If you're setting a plumb line, and what I mean by that, this is where the buyers that you want are. And you can see before we ultimately went up a bit, this is where price came down to where these buyers are. See? And if you were to zoom into here, this is a monthly chart, believe it or not, but if you zoom into here, knowing that this channel was broke here, you have a pretty good shot that, I'm not going to say you have a good shot of getting into a brand new trade where buyers are coming in, but that's the idea. You have a good shot of being in a place where buyers will come in to carry you up, and a place where sellers can't go, basically. So basically, you'll have a retrace on a lower time frame. See if my chart will go back to that. Okay. So you'll have a retrace on a lower time frame. This is the daily now. And you can do a trend line break or anything right here. And if you push this down into the 30 even, you're going to have another channel here, right here. And you can do a channel break. But you're doing this in a place, you're seeing that this is breaking after this major buyer area. This isn't your area, guys. Okay? This is the area. And you see here, just like we said, price could go down, but it chose not to. It went this way. And back even here, you could, just like we said before, these bases for this now extend this way. And it's not that the buyers are here or down here, because we have another break, right? You had buyers here, and you had buyers here, but it wasn't the buyers that you needed. This was. Okay? This was. So you take that line and you extend it, right? And here it's like throwing something that floats in water. You know, boom, boom, it comes up. You can see that now. There's a buoyancy that these buyers are given to this price drop, right? And then here you go. You have another. So you have a new set of buyers coming in right here. Okay? And that level gets extended out to here. All right? And as important as this is, as important as a concept as this is, where your plumb lines, where your trend line break is, basically, and that's because you have a different set of buyers than you did within the trend line. Let's put it to you that way. Okay? As important as all this is, I go back to it, the most important thing is price rotation. Okay? Here we have our downward momentum, just like we were talking about earlier, finding support, going back up. Here you have rotation. Okay? You could have gotten in here. I'm not saying this is where you'd want to be, but say you did. Well, you have a little bit of space to get out. And that's really what price rotation for me is really about, is leaving yourself some room to jump out. See, price could have gone down here. Right? Here. you want to leave yourself some room to jump out. And don't hold on to these things if it's not working out, guys. It takes a lot more to recover what you've lost than to actually just gain. What I'm going to do is I want to switch gears and talk about if this isn't your cup of tea, or this is just a part of the way you want to look into price or look into trades. What I want to talk about are Roth IRAs and how I trade in mine. And you have what's called the rebalance effect. Let's go ahead. And we're switching gears completely. You can take an ETF that represents the market. There's SPY, there's QQQ, there's a host of Vanguard ETFs, there's a host of iShare ETFs, there's even retirement ETFs, AOK, AOM, those guys. I think Vanguard has some retirement ETFs where they're mixing all kinds of assets in there, like even bonds, because when we're trying to position trade, I want price to go up and get out of it. It's a business where I'm buying inventory and then I'm selling it at a higher price. It's the same as any other type of business. But that requires me to be on the chart, basically. If you want to trade without a chart, you can certainly do it. And it's like the what I'm going to show you. And you want to get a Roth IRA. That's what I do. I'm not a financial advisor, but that's what I've done, because you're going to be rebalancing as the market sees fit. It's not like a quarterly thing or anything. It may even be several times a week. I've done it a couple times a day. Okay, it just depends on how the market's moving. But what I'm trying to get to you is, when you have several assets in a stock, say you have a pie chart, or in a retirement account, say you have 1/4 here, a larger percentage here, a smaller percentage of this, and then, and that could be gold, could be bonds, foreign stocks, domestic stocks, and this could be growth stocks, and this could be domestic dividend stocks. You have different factors that you're working with, so you're not always, you don't want every factors are just different types of investments or assets in your portfolio. You don't want them to all be the same, all be stepping in the same direction. And the reason is because you want to have the rebalance effect, okay? And that's essentially trading within a portfolio. It's essentially buying and selling. Within your portfolio, you're buying low and selling high. That's what rebalancing really is all about. So what I do here, let me go back to this. And you can look at these in ETF. You want something that's going to be around forever. Certainly like an SPY, right? VOO. That's the total market, I think, or the total. That's Vanguard's 500. And it doesn't have to be just, it can be a sector fund, anything. Something that you're willing to work. And it could be a stock. maybe. Maybe a Berkshire Hathaway. How does that BRK? Something that in Berkshire Hathaway is a stock, but it's really a fund. I mean, they have that's really what they do. I personally do MSCI. And that's really the only thing I hold as far as doing this. And I may switch out to something not as aggressive at some point. But what I do is this is if you're going to rebalance all these factors here, okay? Say you have 20% bonds, 80% stocks. As the stocks go up, your percentage of stocks that you hold, and this is value, this isn't actual, so the value of your stock portion is, we'll say you go to 90, okay? And of course your bonds would be 10%. So what you would generally do is sell, whatever amount you would sell to go back to 80% and put that back into the bonds. And basically that takes the profits that you've made in the market and it locks them in. It takes some of the profits, it locks them into these bonds, into that 20% now after the rebalance, and that 80%. And then say stocks go back down a bit, okay? Let's redo this. And here, your bonds are essentially flat. And I use cash in mine. I'm a cash. And the reason is just the liquidity. And I'll show you all this. So say your stocks go back down, okay? And so now you have 70% stocks, 30% bonds. And so when you rebalance this time, you're now buying low from the bonds. You're pulling money out of the bonds and buying low. And what's actually happening there is something that a lot of people, I don't see anybody talking about. But like we said, you can trade and you want price to go up. You've bought and now you sell. And there you go. You've got profits. But this rebalancing is kind of like an engine of sorts to generate. What's two things going to happen? You're basically, because you're putting money in and out, you're going to be increasing the number of shares that you own. Okay? I can't spell. Your shares, and your lower, what's going to happen is your cost base is going to lower. I'm going to just say CB. Your cost base is going down, your shares are going up. And that equals positive gains. Okay? And it's your cost basis is really so you can drive down the cost base of your investment, and you can increase the number of shares. The price really doesn't have to go anywhere except up and down. To maximize that, here's what I do. I went through a lot of things. You can have a bunch of different assets and just, you know, the maximum amount of so if your stocks go up, the maximum amount of selling you could do on that would be 50-50 with a stock that goes exactly the opposite direction. That would be your maximum. And then whenever it returns, whenever stock A goes down and stock B goes back up, and that's not realistic. So I do cash. In the most amount of rebalancing effect you're going to have is with 50-50. Because of something's like 2080, it doesn't take a whole lot to go from your percentage to go from, like, say, that 20 goes down to 15 or to 10. That doesn't represent a lot of actual dollars or value or money, as, say, a 50-50 contraction or expansion would. So, and it doesn't really, and with that, it doesn't really pay to have 50% in cash. You can't do that. I mean, you're just, because there's inflation and you're losing out, basically. So what I do is this, way that I look at it is I do, so here is your ETF. And here's your cash. And here's your center value. So as the ETF goes up, it's going to draw in cash. And it's just a mathematical thing. You don't have to look at a chart. You just look at the difference in the values, okay? So if the value of the ETF goes up positive 50, right? So because it's with cash, your cash is going to be 50 less. Or you're going to have a difference of 50. And to bring this value back into alignment, you just divide the $50 in half, and you got 25. So what you need to do is you need to sell off $25 and put it back into cash. Okay? And that'll bring you're selling off half of, however much you went up, you're selling off half, right? And that brings your cash and ETF back into equal value. Now, can you actually, like I said, you're not going to want to hold that much cash. So what I do is this. So if I have a $10,000, if I have that much in a Roth, and I do this in a Roth because it's tax exempt, you can buy and sell. You can do it in an IRA too. You can buy and sell all day. You're not dealing with, you're not having to deal with, taxes and stuff like that at the end of the year. This isn't really feasible for stock trading, I wouldn't think, unless I just wouldn't say so 10,000 in an ETF and 10,000 in cash just wouldn't work. So what I do is a theoretical 10,000 in cash. If I were doing this, and I would only have a small portion in, 500. Maybe just do 1,000, 10%. Just, you don't. I try to hold like about 7% cash. I think I've been able to buy and sell without having to run into the end of the money, basically, with that. So what I'm going to do is we'll do 10% just for ease with this, which is $1,000, of course. So I'll have 1,000 here in cash, in actual cash, and 9,000. Hang on a second. No, I don't want to do that. We'll do 10,000 cash. So say this is the value. I'm going to actually write that down. Okay, I'm going to write 10,000. Make a note somewhere. And this cash balance is going to go up and down. Say we go to our value goes to 10.5. So I'm gonna, and this is my last memo was 10,000. I'm gonna divide that, so 250. So I'm gonna purchase 250. So my new median value is 10,250. Okay. And then as it goes down, I'll purchase more. And I use Fidelity, and there's a cost base. There's a cost basis number for that particular asset, and you'll eventually see that cost base come down pretty quick. Well, yeah, within the first trade, and I'll have the new value. I'll have the price at which, or the amount of shares. Say you have 100 shares or 1,000 shares, whatever. Just depending on the price, and then I'll have the price at which I bought it. The last time I purchased it or whatever, and then I'll have the cost base, right there. And then I'll carry these figures down, so when something happens, I know when the price goes above or below this, I know to either buy or sell. Okay? And I can look at the price, or the price at which I bought last or sold last, whatever the deal is. But you just know automatically what to do. And it's the fact that you don't want to be selling shares that you bought at a higher price, because your cost base is going to go up. But this idea of being able to look at your memo and see what it was the last time is really kind of the trick to this. Now, a couple things. If price just keeps going down, historically prices go up. So you definitely don't want to do this on something that you're not confident in. That's why I say an ETF, where if something's bad in there, they're gonna get rid of it themselves. You don't have to sell that out at a loss or anything like that. The people that run the ETF are gonna change that. If this keeps going down and you just simply run out of cash, you can dollar cost average and just pull more money into the account. If you haven't maxed out your 6,000 for the year, that's something that I'll do. I'll put, say I just need a couple $100 here and there. So instead of just putting everything into into my Roth at the beginning of the year, I'll just maybe put half and then dollar cost average in, which is a good thing to do anyway. As this runs out, That usually doesn't happen because I'm pretty much on top of it, and you're buying and selling throughout the week, really. So you'll get an idea of how this money goes in and out of this reserve cash here. If money goes, if your price is going up so high that you just don't have, it's not you don't want to pull out too much money and miss out on the move, because that's why you're there. So I just kind of, if it goes past a certain point, I just leave it. If it's like, if I've already pulled out $1,000, I'm just sitting on it. I'm not gonna keep pulling out, because price, whenever it goes back down, whenever it starts going back down here, it has pushed that $1,000 up to here, right? And then you can rebalance as it starts to come down. You'll be able to purchase more. You don't want to be chasing those trades. I mean, I don't know how to say that. But anyway, so that's basically what I do with a Roth, with one particular Roth, and it works out really well. So you're going to have three things that are going to happen here. You're going to increase in your shares, you're lowering your cost basis, and you're having what's called the rebalance effect. And the best thing that I can say about this is this really, the rebalance effect really comes from lowering your cost basis, and it's kind of I guess this idea of shares up, cost basis down is the rebalancing effect. You're adding a percentage that's basically set in stone. It's not like it's not dependent on the growth or the decline of the asset. You're basically using your asset as an engine to produce extra shares, and it's just the way any other business works. Anyway, I'm going to cut this short. It's been a long video. I appreciate, if you've made it this far, I really appreciate it. Hondo Solo 45 is the YouTube channel. And I do have a donate button. If you want to donate, if you want to help grease the wheels a bit, that's fine. I would really appreciate that. But nothing here depends on that. And if you want to get with me, shoot me an email, tstc@mail.com. That's tstc@mail.com. And we can set something up and do a Zoom, do some screen share, just meeting of the minds type of thing. And if you're struggling and you want to kind of show me what you're doing, and if I would have any suggestions, if you're in, I'd be happy to. I just love to talk to new traders and traders in general. And with that, have a good one. I hope this finds you well, and take care.